Welcome to your quick market update. Today is Friday, May 16th. Happy Friday. Hey, rates have come down slightly this week due to some weaker inflation numbers. But the big news is that China and the US have agreed to suspend tariffs for at least 90 days. Hopefully, this will be the beginning of talks to come to a more fulsome agreement. For the time being, though, this will hopefully subdue tariffs in the headlines and allow markets to focus more on the inflation and unemployment. I mean, obviously, tariffs have an impact, but still. Speaking of inflation, though, we received the Consumer Price Index and the Producer Price Index this week. The Consumer Price Index is a good indicator of the progress of inflation on the consumer level, and Tuesday's report did show overall inflation dropping more than expected, but the core rate came in as expected. Housing is still lagging, though, in this report, and real-time housing indicators show that today's report is overstating core inflation by about 0.5%. The bigger concern within this report, though, is it looks like the tariffs were not captured, so the initial reaction on the bond market was not as positive as we were hoping. Now, on Thursday, we got the Producer Price Index. Came in way cooler than estimates, but there were some year-over-year revisions that were larger than normal. These numbers are produced by the BLS, the Bureau of Labor Statistics, like the jobs report. And you know how I feel about the jobs report. The BLS jobs report we talked about last week, how they overestimated the jobs market by 100% in 2024. Now the PPI? I hope not. This is concerning, but could be helpful to interest rates in the future. So there were multiple numbers like the industrial production capacity coming in 0.2% lower, the capacity utilization falling by 0.1%, indicating production is slowing and could mean lower prices, lower inflation in the future. Many companies, including Walmart, say they are absorbing the higher costs due to tariffs right now, but they did say there may be price hikes in the near future, so we'll keep an eye on that. Retail sales did come in slightly higher than expectations, but core sales fell 0.2% and was a miss. The next big report comes on Friday the 30th, so 2 weeks from today, the Personal Consumption Expenditures Report. This is the Fed's favorite measure of inflation, and the PPI influences roughly 12% of the PCE, and those components from the PPI on Thursday did show some higher numbers, so there is some concern the PCE may have some upward influences. Thanks so much for watching, guys, and have a great weekend.